You are listening to Build What's Next, Digital Product Perspectives. I'm your host, Josh Lucas, and at Method, our vision is to connect technology with humanity for a simpler digital future. Join us as we speak with leading experts to discuss industry trends, best practices, and emerging technology that can help you and your organization craft better digital products and experiences. This episode is from a tech talk we hosted in our Method office. We host these discussions once a month, and if you like what you hear, we would love for you to join us live either in person or virtually. You can find more details about our Tech Talk schedule at method.com. Now, let's jump in.
Welcome to everyone who may be remote as well, too. Brad did a great job introducing me. I don't want to spend any more time here, but Michael Lewandowski, we've got a great panel tonight focused on a topic that I think actually goes beyond just financial services, but for today's purpose, we're going to really frame it in the context of embedded finance and talk to some great folks who have a lot of industry experience thinking through the strategies of how to best embed financial services and products and bring them to customers in ways that really meet needs. And so we'll walk through a set of questions here today that I'll lead, and you'll get to meet our panelists here shortly, but we'll also leave some time at the end. So think about any questions you might have for them as we're going through, and we'll have some time for that as well, too. Without any further ado, I'm going to go ahead and let everybody introduce themselves. So starting to my left here, Rob Seidman. Rob, do you mind telling us a little bit about your work history and background, and particularly anything that ties to embedded finance?
Sure. Hey, everyone. I'm Rob Seidman. I'm the Chief Product Officer for U.S. Bank Advance. It's the point-of-sale lending business of U.S. Bank. We just launched about a year ago. Very excited. It was a start-from-scratch enterprise for us. Prior to U.S. Bank Advance, I was at two different startups for point-of-sale lending. One called HCS here in Charlotte, which was bought by Ally Bank, which was then bought by Synchrony. And then I went to Sazal, which is a paying for shop out of Minneapolis, where I led the merchant product as well as was general manager for the long-term lending business. Prior to that, 20 plus years in banking, B of A, JP Morgan, Goldman, Lehman, a slew of banks.
We don't want to hear about any of that part, Rob. There's enough folks who know plenty about that right here. So.
Yes.
All right. And Laura, over to you.
I'm not sure I want to come after you. So Laura Merling, and I am trying to buy a bank and implement, we'll call it a contextual banking model. We'll come back to that later. But my history, first 15 years of the career in tech, moved from technology to helping large corporations build new businesses using APIs, using data and APIs. So I was in the API world before most companies knew what an API was. So 2006, working at a little company called Mashery, which I don't know if you guys ever heard of them. Apogee was its peer at the time, just to give you an idea, early entries in that. So then been helping do business building in automotive, aerospace, telecom, again, all digital-based services. Most recently was my banking experience, which is why I was like, I think I should have gone first. It was only 3 years. So I was at Arvest Bank, which is a privately held bank in Arkansas owned by the Walton family. It's about 27 billion in assets or so. And I ran, I was Chief Transformation Operations Officer. So think technology, infrastructure, but also all back office ops and fraud strategy. So that's me.
It must have been love at first sight for 3 years in financial services, and now you got to buy one, right?
Exactly.
Well, we'll get into that here shortly. Jake, over to you.
Yeah, that's absolutely crazy to me, but that's all right.
Noted.
Hey, y'all. Jake Miller. I work at Synchrony. I've been there my whole career, about 9 years now. Started with a rotational program. It's actually where I first got exposed to Skookum at the time. That was my very first job, working with them on Retail Forum, if anybody was around, remember that. And since I've worked a bunch of different roles at Synchrony, both within the bank, some large client co-brand programs, and then most recently I've spent about the last 5 years in our health and wellness portfolio on the care credit side of the house, where currently I run kind of our integrations platform, point of sale, data is a new thing that is in my world now, and a couple other things around our product and capability architecture, as well as our go-to-market distribution strategy for health and wellness as it pertains to tech. So really excited to talk to you all today.
Wonderful. Well, it gives you a little bit of a sense of who we have on the panel today, and I'm excited to unpack all of that. But before we do, I think it's important to just set the stage, and say, what is embedded finance and how is integrations and thinking about them as products? Why is it, relevant? Embedded finance has been around for over a decade and people have been talking about it, but it seems to be building momentum. So maybe to start, Laura, over to you, we'll zigzag here. Yeah, just give us a sense of what's your definition of embedded finance. Why is now embedded finance, more important than ever for folks to think about?
Yeah, absolutely. So when I think about embedded finance, so I think there's banking as a service, and I look at that as more as like providing banking services to other folks that want to do banking type services. So, right, you could think of, and you might all think of it a little differently, but when I think of that, I think, Bancorp and Chime, right? But when I think embedded, I think, sort of Stripe and Shopify, right? So it's actually bringing the bank to to a non-banking entity so that you can use that banking service to provide better value, right? So you get the same thing with Evolve and Uber type of construct. And why is it important now? And I think it's going to even continue down that path because you'll see others, right? So you got like Treasury Prime and Builder's Trend. Builder Trend. So think financial services inside of a platform that you use to manage construction projects. So it's actually bringing it to these industry specific. And so I think it's important now because when you think about who uses your tap to pay, right? Everybody, right? I use my phone, I just go, convenience of it. So how do I actually bring that now to the convenience beyond just tapping? What is that tapping equivalent for every other industry? And so I think the next phase of this is actually what I talked to earlier, which was something called contextual banking. There's a little bit that's been written up on it, not a ton. But it's actually not only are you embedded in that platform, but you're using the data from that platform to provide cash flow based lending or to provide actually advice, business advice. I can't say that. Business support. What's permissible? Sorry, I just had my meeting with the regulators, so I'm all excited about this. And so it's about using that data in the context. It's meeting them when, where, and how they want to be met, right? That's the key is how do you meet customers, whether they're a business customer or consumer, when, where, and how they want to be met. Who knew we actually wanted to tap to pay for something? I don't think I've taken out a credit card in ages. So now what's that next application? Anyway, so I think Apple taught us that that's what we should be doing.
Yeah. No, I've always passionately said, financial services are services, right? They're something that you are providing, but there's really another job to be done that people are really passionate about. And I think you're hitting on some key elements there. Jake, anything to that you would add as a definition? Or if not, from a Synchrony perspective, why is embedded now becoming more important for you all as a company?
Yeah, absolutely. I mean, I think you absolutely nailed it, right? But the extra lens, I think, from a Synchrony perspective, particularly in my health and wellness space, right, is it's ISVs, right? Independent service vendors, right? Which is kind of, you can think about that industry software, like practice management software, revenue cycle management, some of which have a financial element, but not necessarily embedded within the flow at the right moment for the right consumer, right provider, right merchant at the right time, right? And even extending that further, I think things like insurance offerings, right, is something that we're starting to see in the space more and more. So it doesn't have to just be credit cards or ACH transfers or, typical money movement. It can be a wide gamut of different products, depending on, again, what the right offering is at the right point, which I think is key to this space and why it's so powerful and valuable for really anybody that's consuming it.
Rob, I know we've kind of gone into it, but you've had 3 different stops, at least in this realm, if not earlier ones that flirted with it along the way that I dismissed. But anything you would add or, observations have you seen around the growth of importance as you've done different stops along the way?
I think the most important thing I've witnessed is the rise of the experience trumping all else. It's about the user experience and contextualizing the need for finance payment, whatever the service is within the context of what the consumer is trying to do with the business that they're interacting with. So embedded to me at the heart of it is just ensuring that the user experience is owned and defined by the business and their consumer interaction. And our job is to be as seamless and invisible until needed as humanly possible. And so the overarching goal that we strive for, generally speaking, in thinking about embedded is, the first question we open with is, tell me about how your business works. Describe the interaction between you and your consumers. And our job is to make sure that we fit there. That's embedded to me. And then the rest of it, how we do tech stacks, how we build, how we do mapping and workflows and all that good stuff goes from there. And even how we think about constructing our platforms, right? Like how we think about the choices in technology, the choices in user experience, different modalities, omni-channel, like all those things stem from the first question, which is, tell me about how you do business with your customers, and we'll talk from there.
Well, Rob, you were joking that you didn't remember what we teed up, but you just did a perfect transition to our next topic. And so, Jake, I'll start with you on this one, but I think a great way to think about it is, what are the strategies? How are strategies being driven? And I love, the introduction of what our customers' needs and really deeply understanding that as an entry there. But then what are the challenges too? When you're part of an organization and you're thinking it through, I think I was talking to you earlier to Jake. I've had 4 or 5 conversations with different organizations in financial services about a similar problem statement or opportunity statement in the last week. So what are some of those challenges when you do lay out the strategy? So either side.
Yeah, it can be cultural, right? So, at least I'll say with Synchrony, right? Our bread and butter was our co-brand, right? And heavily bespoke, customized offerings for our clients. That's not really what embedded finance necessarily is, right? Because there's so many different types of merchants out there and so many different types of platforms that there are opportunities to embed yourselves within. And so I think first and foremost, understanding that landscape, right? Understanding the types of partners, the right way to offer, understanding the experience and the right core of what you're supposed to be offering. It makes it kind of bundling up the right solution quite challenging, right? Because what might work for one subset of partner or entities or platforms may not be optimized for another. But at the same time, if you get too in the weeds with the different permutations, you lose your ability to go fast. You lose your ability to optimize, and it becomes really inefficient in a way as well. And so I think balancing kind of the strategic need you see in the market and the different, again, variations of merchants and consumers and providers and what have you with the right offering, it becomes a little bit challenging from a enterprise perspective to really tee that up in an efficient and scalable manner.
Yeah, I think that's a great perspective to keep diving into. Rob, anything you want to share on top of that? I like also, if I can, prod you a little bit, like you talked about getting to know customers. How do you even figure out which customers? How do you figure out in a huge marketplace where the TAM's always, sizable when it's on paper and in a strategy document? How do you figure out which segment is the segment for you across your steps?
They're all our segments. We do everything. I'm just kidding. We don't. Inherent and embedded is a partnership between 2 companies. And to me, that's really hard. Like, you got to be ready for partnerships. Some financial institutions do not do partnerships well. Some do it exceptionally well. Some are built for partnerships and some are not. So I think it starts with organizations that have the same ethos about how they're going to go to market together, go do business together. When it starts there, then I think you have something to work with. Do you have the same goals in mind? Do you have the same objectives? Do you understand, deeply the user need that you're trying to solve for and what each role is, what each of our roles in this relationship is? Like, to me, partnerships are hard. If whoever's done business partnerships, and it can be referral partnerships, it could be fully embedded, it could be every flavor, right? Everything as simple as SSO from one to another. Like, it doesn't matter how enmeshed and fully embedded you are. If the partnership isn't built on a really thoughtful base, it's not going to work. It does not matter. So for me, it's like the partnership structure and going to the choices are, how you choose to me is very typical strategy work, in my opinion, which is, what your means, how do you differentiate yourself from the marketplace in which you sit? What is a durable way to differentiate in the marketplace? What do you offer that someone else does not? And then lean hard, like lean really hard and figure out the optimal ideal client profile like everyone else is trying to do. If you get those things right, and then you have to have a go-to-market strategy that is befitting of the differentiation of the strategy you said, and then you have to execute. That's the hard part. Like, you do all 3 of those things, and then you get to claim victory. It's a stepwise progression, I would say.
Yeah, I think I'd like to come back to that one, Rob, because sometimes, arranging the partnership is the easiest part, right? And then there becomes the implementation, which becomes a little bit harder. And then sometimes you think that's the worst part. And then it's sometimes managing the relationship. And then how do you do upgrades, and what happens when one partner wants to make a change, and how are you doing that across scale, to your points earlier, Jake? So back over to you, Laura. I mean, talk a little bit about strategy from where you're sitting today. How are you making the choices that you're making and thinking about partnerships or thinking about segments? And then what are the challenges that you're anticipating and the strategies that you're taking to kind of counter those?
Yeah. So I think, to your point, it's who are you serving? What problem are you solving? Right. So for us, it's like to go buy a bank, right? You have to go with a business plan to the regulators and say, this is what I'm trying to do. So, and then if you're going to buy a bank, which bank do you buy? How do you choose which bank you buy? Well, you want it to be somewhat aligned with whatever your strategy is. So it's figuring out what problem are we solving for and what segments are we solving it in, right? And then, so for example, we're looking at industries that have some irregular cash flow challenges, right? There's probably 10 that really fit in that nicely. And then you take those 10 segments and you figure out which ones can you solve for that have some level of similarity in terms of where you want to start and how you could solve it for them. You're going to then have different partners that you choose from. So choose your partners wisely. It's got to be something that gives you enough TAM and enough learnings, but also be able to structure it in a way that I don't have to go, especially with regulators. They don't want you to, you can't show them a hockey stick. They will not like a hockey stick, right? So what you do is you figure out, I got to make sure the partner can fit into the model of growth that I want to, and that meets their needs in terms of how I want to grow and where we grow. I think a couple other things that are interesting challenges is, how does everybody get a win, right? So how do you create a multi-sided marketplace that everybody gets benefit from, not just from revenue, but are there other benefits that are direct or indirect to all the parties involved? And that is the piece. And all the parties involved is the partner platform that you're partnering with, yourself, and then the end customer, whoever it is, the consumer, or in my case, I'm targeting small businesses in certain sectors. So it's been all those pieces of the puzzle. My biggest challenges are more regulatory driven than anything. And finding a bank. Anybody's got a bank they want to sell me, I'm open.
Anybody have a bank for sale? Anybody?
Yes and no, I'm kidding. But no. But I do think part of it is putting in place that right strategy and picking the bank, because that's all the regulators have asked. Well, do you have a list of banks? And it's like, well, yeah, but my list of banks, I don't think are actually trying to be sold. Like, we took 4,300 banks and got it down to 30 that fit the profile of the customer we wanted to serve from 4,300 banks. And then when you look at that and you go, well, I want to be OCC regulated, which you might think, because then you got to pick which regulator, and who knows what you're talking about or who doesn't. And why did you pick that regulator versus that one? Sorry, I'm done with my complications. There's a lot.
Most of these folks here didn't pick the regulators. The regulators picked them, and it's a different story. But before I forget, look straight ahead at the gentleman in the 4-0 hat, and he's someone I think you should probably meet and talk with before we're done conversing here today. So that 4-0 was part of our last financial service panel that I hosted. So good small business focused companies, hopefully collaborating together at some point in time.
Perfect.
Let's start, on a kind of a multi-stage, zigzag through here, like lessons learned, like hard lessons learned through your process of embedded finance and taking integrations and, trying to commercialize them. Rob, let's start with you. Along the way, can you kind of cite a challenge that came up, and, why and how and what that means for how you think about maybe the way you approach things today?
Sheer unadulterated pain throughout. That's the way I characterize it. I would say, so by way of background, our business model is B2B2C. So we sell to merchants then offer us in a checkout flow or some embedded way. So that's just the model we built. We target service-based businesses, so we tend to be heavy invoice-based right now. We do have e-commerce solutions. So I just want to set context when I give these lessons. In prior lives, we had been in service-based paying for the Sezzle crowd is 100% e-commerce nearly. So we've had different challenges based on the business models that we were enacting and the partnerships we were taking on and what embedded meant to them. So I'll give my kind of 3 highlights over the last, call it 10 years. First and foremost is pick your partner very wisely. If you don't fit them and they don't fit you, that is sunk cost that will never, ever, ever come back, and you won't make a dime. And you can spend a lot of time in integration hell and not really get any monetization out of it. So, this is as a bank or a fintech startup, it doesn't matter. It does not matter. If you guys do not align to one another in terms of business objectives and how you plan to get there, you're in for a world of hurt, financially and otherwise. Second is, once you get into the execution mode, stay in touch as deeply and as often and as intimately as humanly possible. The more you are in service, we're a service company, right? A bank is a service company. The more we are in service of the merchant we are serving, the better off both parties are going to be. So it is about constant communication and ensuring that, I run my product organization based on OKRs. I'm a big believer in alignment. You got to be aligned throughout. And as needs change, as goals change, stay in alignment. When alignment starts to leave one another, it gets very hard to get back on track. And then lastly is, from an execution and ongoing perspective, I really like the idea that when we talk about embedded, there's inherent business goals and objectives that you can meet with embedded. One is it's really sticky, right? So you put in the pain, and the reason is that there's a long-term payoff because you have this kind of outcome, which you're really seeking, which is this sticky, fruitful relationship over a long stretch of time. That's meaningful. And I think that to the extent you are very clear about why you've chosen the business model and how you plan to achieve those goals, that's really good. So mindfulness in terms of business model and execution pathways is a critical consideration for us. Those are my 3, I'd say.
Those are important 3, and maybe we'll dig a little bit deeper into those in a moment as well. Laura, I know whether it's in your time with Arvest or even before, because integrations and partnerships are not, alone for financial services as an opportunity and challenge. Any lessons learned that you would share, and any kind of strategies or approaches that you think are helpful?
Yeah, it's similar to what you said, right? Which is, part of it is you have to set up an organization that manages those partnerships and on a regular basis. So it's almost like a support team that's dedicated to that individual partner. If you can set that up and manage it, they manage the OKRs, the relationship. They're constantly talking to them almost on a daily basis. I think that is, first and foremost, making sure that that's part of your setup and structure of your organization. I think the other thing that's interesting is the thing that I've been trying to focus on most is, how do you start day one? So this is going to sound really boring, but I've been looking at all the consent orders that have happened around embedded banking as a service. What are they for? What are they about? How do we make sure day one, when we open up the doors, that's addressed? So there are different entities that you can partner with that actually have been helping these other banks set up their partner programs, and not just your typical third-party partner program, but for embedded. And there are people that specialize in doing that. And so making sure that day one, that you have that as your groundwork, but then also bringing that to your partner. So your partner actually understands, these are the guidelines by which I am going to run and operate, because these are the guidelines by which we are going to be judged as a partnership by the regulators in order to keep it moving forward. So I think those are kind of the 2 things that I would focus on.
A lot of important mentions of regulators there. Certainly some recent regulatory activity that is going to change and shape how embedded finance is going to take hold in the coming years. And maybe some political changes that'll impact that obviously as well too. So, but before we get away from that, Jake, on your side, what are some lessons learned? What is maybe some guidance you have from your experience over the time you've been doing this with Synchrony?
Sure. How much should I filter that from what we talked about earlier? I don't know. So, and actually, Rob, to build a little bit on what you said, right? Maintaining that partnership and and finding the right fit is so critical. I think something that we tend to do as is trying to be, good partners at the end of the day is we'll throw everything, right? We'll throw everything we have at a given partnership if we think it's the right opportunity. But more isn't always more, right? Just because you're going to throw a bunch of different APIs and opportunities and products and capabilities at a partnership doesn't mean it's going to be more successful. It just means you're putting more work on yourself and the partner at the end of the day. And if you're not meeting business outcomes with that, if you're not aligned, you're not really doing yourself a service or the partner a service at the end of the day. And so I think finding that right entry point, the right model, and the right type of partner is absolutely critical. And then maybe one to diverge just a little bit is, and in the regulatory vein of it, but like, it is a partnership at the end of the day. We as the financial entities obviously want to do everything we can to make this process easy. That's the whole point of embedded finance, right? Is we're the experts on financial products, the partner is not. There's still going to be burden on the partner, right? Whether it comes to regulatory items, information security items, what have you, right? That burden doesn't fully go away, and we can't fully absolve our partners around that. And so I think a critical learning we have is build for the future, build in a way that mitigates that challenge and burden on the partner as much as physically possible, but then set the right expectation with them that this is going to come around at some point. There's going to come a day when, you have to update things from an, InfoSec perspective. There's going to come days when you have to change language or something like that because of, legal regulatory items, right? That stuff does not go away. So I think it's all about building that partnership. And, again, I think in the effort of being a good partner, you can actually do the end partner a disservice by trying to take on too much burden that you'll never be able to kind of keep away from them at the end of the day.
Yeah. Did you want to jump in?
Yeah, I just wanted to add something because while you were talking, it made me think of, the thing you want to just think about, right? When you're building a developer ecosystem anyway, let's say you have a publicly facing API, there's a huge long tail that's just going to use stuff, but they're not going to bring you value. You have a handful of partners or a handful of users of your APIs that are going to make you successful. You got to think about that with the partnerships too. You don't need 100 partners. You need like 2 or 3, right? You don't need a ton to get the value and to be able to maintain it. So I think if you could have that focus on who are you partnering with, and that way you can also make sure that it's more successful, right? If you spread yourself too thin, nobody's going to be successful. And most of it's the long tail anyway that you're not going to get the value from. So it's really being strategic about who that is. And so just compare it to your regular, I'm running a dev program, right? A developer program, and you'll figure it out.
I mean, let's stay there though for a second, and really just talk about the partnership and how difficult it is in a normal single organization to bring and commercialize a product from strategy through development, through the actual implementations and the maintenance of it through a market. And that's a single entity. Like part of what we're really doubling down throughout the course of this conversation is the challenge of doing that through across partnerships. And so would love for you to kind of think about the end-to-end life cycle and just kind of provide any guidance, advice, thoughts that you have about what's made something particularly successful or where challenges have come as a result of a lack of planning potentially in some areas.
Yeah, I think go-to-market strategy, let's start at the very top, right? After you have your strategy and you have a go-to-market, so I'm assuming on some level that we're, starting from scratch. That's not what most people in the room are doing. But like when you build a go-to-market strategy, everything from how you sell to how you bring leads down funnels, to onboard and activate and then start the monetization kind of loops that you want to get into and growth loops and all that good stuff about growing. I'm being very producty for just a second, but like it starts at the very top, like how you sell and how you bring people down funnels into the activation journey and onto the monetization journeys. Like if you're doing embedded versus like a straight, direct relationship. Now we do both. We're a huge bank. We serve lots of people. We serve lots of different merchant types. So we have both. We have markedly different go-to-market machinations from embedded than we do to our referral partner crowd. Now our business, we sit inside our acquiring business called Elevon. It's like the 5th largest acquiring business in the world. Our acquiring business is a huge third-party sales organization, right? So we use third parties, we partner. It is the way we do business. Partnerships are the way we go to market as US Bank in this particular business line. So that go-to-market strategy and all the things we have to build to, bolt on a point of sale lending business on top of or inside of US Bank has a totally different consideration set than if I were to stick it in the branch network, right? For example, because we saw acquiring through the branch network, as everyone bankers know. So it starts at the very top, and then I'm going to just pick up where you left off. How you staff people to build embedded. Think about an onboarding to activation leap, right? Like for embedded, these are developers and um, uh, product people. They're not individual sales people. They're totally different. The user need is totally different. What you build, how you support them, how you're going to nurture them over time is totally different. And then once it's up and running, how you manage it is totally different. So from my perspective, I look at the end to end now because we have both models embedded in how we go to market. We have to support both, but it starts at the very top and it literally, it flows through every aspect of your business, all the way down to the operations team that, for example, call center, we have two call centers, one for a merchant base and one for a consumer base, but we're B2B2C. So it could be that a consumer's calling with a need for, hey, I had an interaction with a merchant. A consumer call center has no idea what to do with that, right? So everything you do literally from top to bottom has to be thought through carefully when you do embedded as a means to go to market. So that's the kind of 50,000 foot view with a whole lot of stops in between.
In summary, it's all important. Laura, though, I mean, anything in particular you want to drill into as you think about the end-to-end model and areas that are particularly key or routines or habits, around maintaining the relationships, anything that you just want to add to that? Because I think it's an important topic.
Yeah, I just think at the very foundation, like even making it work. And I think it's interesting because it's probably the root of all of our problems for everything that we want to solve right now with embedded or AI or any of this is it comes down to data and your data platform for any of this and how that's structured and how you've been thoughtful in designing it in order to be able to use it with embedded. I think the one thing that I've seen is without that, right? Because it has to be accurate. You have to be able to know who your customer is. You have to be able to manage that data. You just, the biggest challenge, especially if you're, and the reason I've been thinking about this a lot more is right at Arvest, you're a 60-year-old bank. And you've acquired other banks along the way. And oh, by the way, every one of your product organizations is independent. But if you're trying to provide banking services or embedded services, more than one, if you're just doing a single service, that's easy. But now if you're doing multiple services, well, gosh, if your own customer can't even see a single view of themselves, how are you now going to do this through an embedded partner? So you've got to start at the ground level with think data platform first and foremost, and how that's designed and architected. And I guess that's my one add to like, what do you need to think about?
Jake, just keep it going.
Yeah, I mean,
Partnerships,
it
what's
enables
working, what's not working, what are the keys to success?
Sure. I mean, the data piece is what enables scale, right? Like you can't scale up your offerings. I think Synchrony actually, very fortunately, right? I don't think I know a world since I joined where we didn't have some sort of embedded finance offering. We've been doing it, I think, before it was even really like a true thing. I don't say that to brag or boast Synchrony, by the way, but like we were fortunate in that I think it was just a core part of our DNA and product delivery and our technical life cycle. And so that stuff I think came easy. What maybe hasn't is a bit, I think, of what you talked about on managing the complexity of those partner relationships relative to the construct of consumer and the provider or the merchant, right? When they call in and, you try to explain to the consumer, hey, yeah, that thing you're using through this tertiary or even fourth level partner, it's actually really just this product and this scenario with this offering, right? And getting, internal sales teams to understand the complexity and nuance of what goes into some of those partnerships and integrations and implementations is incredibly difficult, right? Because it's a very different model than I think what a normal support or operational organization is used to. Right. And so it's building up all the chops around that as well. It's not just a technical proficiency or having the right capabilities and products. It's throughout the whole life cycle of, again, how we engage with our end consumer, the end merchant, having the right infrastructure in place to make this understandable for them and be able to support them throughout, whatever comes in that journey. I think it's incredibly challenging and often overlooked because, you focus on the actual implementation itself so much.
Absolutely. Implementation is not the finish line, right? Two things that I think, Laura, you started, and I think you kind of led us to naturally, Jake. We've been talking about a partnership, but scale, right? And so how do you develop a strategy, a solution that can work for multiple partners, that can be supported by multiple partners? Or if you prefer to take a different angle, across generations, across, different life cycles, and how you want to mature your tech stack or your strategy. So pick one side of that, or both if you want, starting with you, Laura, around what does scale mean as part of the strategy or part of the partnership plan? How do you think about the packaging of the product to make sure it can go beyond a single instance and meet future demand as well too? And not say yes to every customization to try and get the first business that then find yourself in a mess down the line.
Yeah, well, and it kind of goes back to who you selected as your target customer and what problem you're solving for, right? If you can start with that as a framing, then it's how you design and architect it. But what's been interesting is, so, you have to think about is if you have so if you're an existing bank, right? You have an existing core infrastructure, Arvest, we had Signature. It's been around forever. It's highly customized. So we started building our own new core. Is that what you want to do? Is that where you start? Does that then give you scale? Because there's no way we can continue to scale on that existing core infrastructure. Do the people there know how to do multi-tenancy, right? Who is there that's going to build it? Are you building out a whole net new team and net new organization? Do they understand how to design and architect for it? So I think it's thinking about what you have existing and who your team is, and then using that to say, where do we go from here? Are we going to navigate and start net new? Or do we have a way to, abstract it and make everything headless in front of it and still get scale, but then you have some risks? Did that once before at a telecom, and it worked for the iPhone 6 launch. It worked until it didn't work. So sorry if you were involved in that. But so I think there's just lots of things to think about relative to it. I don't know. I'll stop there.
We can start a college recruiting program for COBOL engineers. That's what I think that's where the money is.
Just call it retro. It's like a VCR or a record. You just got to make it cool, not make it sound like it's something that's,
For the non-bankers in the room, core banking systems were built about 50 years ago in COBOL, and they're still running. They're still running.
There's not many people running them anymore, but they're still running.
Yeah.
Jake, I know you have some thoughts on scalability and how that happens or how it gets challenged along the way. Share some thoughts with us on that.
Yeah, it's always a balance, right? I think as organizations, right, we focus so much on growth and new builds. You got to take time to kind of look at your infrastructure, look at your operational aspects, invest some of that money back into run. If you don't, you can't scale, right? You will hit a point, especially I think with integrated partners or embedded finance situations, where you can't scale your technical solutions anymore because you haven't invested enough in the base. And taking the time to then go back after you've hit that threshold is so much more difficult than doing it along the way. And so I think that's a core aspect of, how you build integrated offerings, because again, anytime you have external partner dependency on those, indirectly in the way that happens in the case with embedded finance, it becomes a lot harder to maneuver around those implementations, maneuver around those dependencies. And so again, if you have to take time to then go back and address your core infrastructure, how you support things, your ability to scale, your cloud infrastructure, whatever, mainframe infrastructure, not even going to go there. But, if you don't take time to invest in that, you're going to hit a wall, and one that'll be inexplainable to the partners at the end of the day. And it's not a good look, right? So I think that's a big focus, right? Is setting enough aside to not just focus on growth and new business, setting enough aside to be able to scale whatever business may come.
Yeah, I'm going to take a different angle. So the existing companies, we suffer from an onslaught of requests. It's not I start from scratch and I get to make up whatever I want. I did for 2 years until we hit launch, and then we didn't, right? And now it's an onslaught where it's you get asked to do, it's not the really big stuff, it's the little stuff that'll kill you, right? Because it's not that someone's saying, I want to refactor, your entire API suite. They're saying, I need this thing, right? But you have 20, 30, 40 embedded partners coming at you saying, I need this one thing and this one thing. Well, that one thing is 40, right? Next thing you know, like 2 years later, you have a 10 to the 10th power of configuration options based on those little one things that you've done. So the hardest part to me is to kind of manage the complexity that you can create on your own by doing the little stuff without having like a pretty thoughtful picture in your mind about exactly what you want the platform to do and the things you're going to say no to. Saying no is by far the hardest, right? Because there's always revenue on the line. There's always a salesperson yelling at you. Like, and I'm the product guy, so I can say that, right? But although I just took on sales, so I'm not sure I can say that anymore. But those are the things that that to me inhibit growth and scale as much as anything else. And I think part of the solution, I'm not sure it's the perfect solution, is to make sure that, like, what we try to do is to ensure that we have an incredibly robust decision-making apparatus in place to be able to intake, decide what's truly important to us, and then go. But once you're going, you got to go, right? And so for us, it's, we say no probably 90% of the time. We have a relatively small team in terms of bank. In terms of like a large bank, we have a relatively small team doing what we do. So saying no is kind of what we do more than we do anything else. So when you say yes, you got to do it right. It's got to be really good. It's got to be scalable. It's got to be resellable. So, and then going back to the go-to-market thing, you got to bring it to market the right way so that many people can use it and see the value of it as quickly as humanly possible. That's kind of how I would think about it.
So yeah, just to add real quick, I mean, having the data to back up those decisions, right? I think it can be an emotional space, right? Because you're dealing with clients at the end of the day, and there's a certain unknown with strategic value that you have to balance with known revenue that can come in with it. And that's got to drive those decisions because they're not easy to make.
Yeah, there's a different angle about scale. I was just sitting here pondering, which my biggest fear around scale is fraud. And so the fraud team's head in my organization at Arvest. And right, you know, it's playing a game of whack-a-mole, right? And so doing that at scale and being able to address it as you're adding in these partners and as they're growing, that for me is the one thing that starting with your framework and foundation and thinking about fraud and how you're going to address it from like a scale perspective day one is super critical because it's just an ongoing moving target and it's only getting more complicated is the word that I will use. More complicated when we start thinking even digital identities can be faked at this point, right? So that's the one. Sorry, I was just not to scare everybody, but that was like just sitting here thinking.
I went down memory lane for a second there when you started talking about onboarding new partners and fraud increases. Not that Rob and I remember anything along those lines at one point in time in our career, but no, I mean, all really, I think, important things. I do want to take us a step back because I think we have some good time and then I'll do one question after this one and we'll open it up. But I think something that we didn't talk about when we were talking about partnerships and understanding customers were all the different people who need to play a role to bring an integrated or embedded product to market. And understanding kind of the personas or the needs of a developer versus, a go-to-market or commercialization team at a partner versus actually like what's the end customer experience like, and being able to navigate those hop, skips, and jumps as you're doing that partnership evaluation. So maybe if we can take a step back, and Jake, if I can put you on the spot and start with that one, like how do you all think about meeting the needs of the many players that need to be part of the value delivery process to meet ultimately an end customer need?
Yeah, I think there's a really interesting hybridization that starts to happen in this space, right? Your salespeople have to be a little bit more technical than normal, and your technical people need to be a little bit, frankly, need to be able to talk to people, right? Like that needs to be a skill set they have. So like, your point, it's a difficult thing to, of course, hire for, but it's also a difficult thing to train and set paths around. And so I think that's the big thing, at least that I've seen in my space is putting an emphasis on documentation and process more than any of us would actually like to do, right? Because that stuff is generally not very fun, but it helps set the guidelines, it sets the protocol, it sets the ability to engage throughout the life cycle, whether that's, from all the way up front to the actual initial build of a new product or offering through to the commercialization, or just commercializing existing build capability or product, right? The various teams that are involved in that, whether it's sales, go-to-market, technology, product, engineering, data, you have to have a common vision there and a common sort of set of guidelines around how you're going to commercialize things, how you're going to talk about it with a partner, how those things are going to be offered up, and make sure people actually can see that firsthand. Something we've been doing around this lately that I really like is opening up ride-alongs, right? My team, as we're engaging the client on technical integrations, we've been pulling along product folks, we've been pulling along engineering folks just so they could see what goes into an integration. How do we interact with the partners? How are their capabilities being used? I think it helps lift the veil a bit on what we're actually doing, right, collectively, and what we're trying to do and where, the issues may be or where things work incredibly well. You start to get some diverse thought and minds in there as well. So, a whole lot of things there. It's a really difficult space, I think, to solve for as it pertains to resourcing, but, it's exciting too. I think it gives really cool opportunity for people that otherwise maybe don't get exposed to that sort of space. And, it's a good way to get people excited as well within your organizations.
Yeah, I like a lot about what you said there about bridging understanding gaps between teams and getting that empathy for what others are actually doing and why, and why something upstream or downstream is important from that perspective. And I also have to say one of my favorite things I've ever seen is developer personas for developer portal purposes, and seeing a developer actually put as a prime character in the value chain of how you actually bring something to market. But I want to give both Rob and Laura a chance to weigh in on thinking through, all the parts in the puzzle that need to be considered to actually deliver an embedded value experience.
Yeah, we have the most recent example for me is we launched a new product inside a big institution, right? And on our go call, we had 353 people on Sunday at midnight. I didn't know half of them, and I built the product, so I'm not exactly sure what they all did.
They remember you now, though.
But I know they were stakeholders of some sort or another. I'm being facetious, but there were so many teams. So I think they're circumstantial. You have to kind of play it as is. Like when a true startup, like where we did, or at Sezzle, for example, where there's a couple hundred people. In our case, it was like 50. There's 6 people that matter and 200 that like to listen and another 100 or so that kind of like are out there that support when needed. So I think the key thing is that the constant regular communication and to bring people into the fold as much as humanly possible, which is really, really hard because things move quickly, right? So we integrated into a lot of systems in my most recent launch. I'm talking like 50 plus systems. So you have a lot of people on the call, and that's just tech. We do risk reviews every month, and there's 27 risk people in me. I don't know what 27 risk people in me do, but that's what we do. We go through the risks, but that's the way it is at a big bank because there are lots of risk people and lots of risk organizations that need to know
I think it
exactly
suggests
what we're
some
doing.
things about you, Rob.
That's probably true. That's probably true. Well, most of the time my boss goes inside of me, which is even better. But there's also let's talk about the building process too, because I think that's incredibly important. So engineers, designers, and the product people, and I'll even go upstream. So I personally am a huge believer in design thinking. My partner in crime for B of A is actually back in the room, who did it with me back in the day. But I am a big believer in understanding at depth, in real depth, what the need is. So when you start getting into execution flows, that you understand who the stakeholders are, who the users are, and you bring people along with you at a fundamental level where they're going to get it. Like they're going to emotionally get it. They're emotionally bought in. They think they're part of the winning team. That to me is like, that's it. Like that's the secret sauce. And when that takes place, like stakeholder management becomes much easier, right? So for example, during the build process, we built for 11 months. Yeah, we built for 9 months. It was 9-month build and a launch. And so I sent out a weekly update every Friday night, which is like the bane of my existence. But it went out to 350 people. And it was insanely helpful because we went group by group and said, here are the successes of the week. Here are the challenges of the week. Here are the blockers of the week. Here's who stepped in and helped us. Here are the implications of these things. And here are the whys. And the bottom line is when we went live, there was no one complaining that they didn't know. Like the excuse was kind of taken off the table. Everyone knew. And now we backed it up to a monthly, but same kind of crowd. Now we slimmed it down to the 250 necessary. And so the 350 But it's still the same thing, right? It's the collective we. So stakeholders aren't like constellations that you need. They're the we. And if they are the we, then everything becomes much easier in terms of stakeholder management, in my opinion.
Love it. Thank you.
Yeah, that's great. I mean, to play on the we, how do you get them to know that they're the we? So one of the things that I feel very strongly about is, so I have direct reports, but and each one of them has I might be responsible for data, and I'm responsible for fraud, and I'm bank operations, but there's direct reports, but then there's the next level down of all of the leaders that report to those leaders. They never saw themselves as a leadership team. We had this challenge at Arvest. They didn't see themselves as a leadership team. They were in charge of their silo. As soon as they got acknowledged as a leadership team and we brought them together every 6 weeks like clockwork, and it was more about getting to know each other at a personal level. It wasn't actually about, we did do the product ones too, but first and foremost, every 6 weeks, it was how do we get to who you are, how you think, why you operate the way you do, what challenges are you facing, and then getting them to create the operating model by which they wanted to go deliver these new products and services. They created it. What don't they want? What are you going to throw away? Like, what don't you like about how it's working today and throw it away? And how do you want to operate in the future? And that just completely changed how people interacted. They actually saw themselves as a we versus I do my thing, you do your thing, and we'll come and talk about it on the project calls. It's getting them to actually realize they are a leadership team and then treating them as such, but also they need to know each other a little bit more personally and why somebody believes in, we all have I'll call them our religious beliefs around how things should get done. And so how do you get them to understand the perspective of why someone, their background, their history, where they came from, what other companies they worked at before, or what's going on in their family? Those all make a difference in how they're thinking about something day to day. And that helps you work as a family. So that's my we.
Yeah, I just want to celebrate that last part. We might talk a lot about embedded finance as a product or integrations as a product. It's a different feel from even just a traditional product motion. And the collaboration, the culture, the understanding, the OKRs, and the common goal, those are the things that keep people on the same page, the continuous communication. That is what operating an embedded finance or integration as a product really means, is really having that common understanding of that goal. And then the throughput comes, and then the success comes on the delivery side versus if it's siloed and if it's broken or people don't understand, then all of a sudden you start getting the drops and the gaps in between those silos. And you're running a little bit less efficiently. We're coming close to time, and I just wanted to have one more question on my part, and then I'll open it up to the audience or online. The future. What's in the future as we look ahead 5-10 years, embedded finance? What are experiences that are going to be facilitated by embedded or integrations? And what does that look like, or what excites you the most about what's to come in that realm?
I think everything is going to be embedded in the future. APIs have enabled kind of a different world to take hold. That's first. I also think that it used to be one-to-one, meaning like, okay, you're a merchant, you need a finance partner. We link up via APIs. I have a dev portal, you hit them. That's not what's going to happen anymore. Now there's a constellation orchestration engines, or even like AI, in my opinion, will rethink and reimagine the old orchestration idea of multiple API providers. So now you have let's take a middleware player. Middleware players and payments, take in, for example, they may, do API integrations with 5 different banks, right? To say, the fintech layer, right? This is kind of what they do. Banking as a service, lending as a service, like picture anything AAS at the end, right? And in the future, I think it's possible that those things start melding together pretty dramatically. And you can embed everywhere and anywhere that the end user will absorb it and want it as the way they operate. Adoption curves are pretty interesting to me. Like I look at S curves over time. We did this big study years ago that looked at adoption curves of different banking technology, whether it be like the invention of the ATM to the debit card to the Visa So logo debit card to Apple Pay to like, the curves were immutable, right? They had the same exact pattern, which is like this kind of 3-year thing. If you're a tech believer, maybe it's a little bit faster, right? Nowadays, ChatGPT's growth has been otherworldly, but finance and consumer behavior is not, right? It moves much more slowly. So it's hard to take on lots of new patterns all at the same time. So I do think there's like a limitation factor in human beings, just how much you can absorb change at a time. But I also think when it's absorbed, it'll be like insanely, it'll change like much more steeply, rapidly, and the ascent will be incredible. So I don't know what that means from a tech stack perspective. I'm not an engineer by background, so I'll leave that to the engineer crowd. It's just my belief that like when you build for human beings and users that are human beings instead of other bots or other machines, there's a limit. But once you convert them over, the limits start to get like bigger and bigger and bigger, which I think is pretty fun.
Yeah, I think to your point, I think everything's going to be embedded. I also think it's going to be seamless. And if you want to start with basic examples, right? Does anybody use Flipboard? I'm like total Flipboard junkie. So take us out of banking for a minute, right? Flipboard world, right? All your news sources are there and it's customized for you when and how you want it, right? And your news feeds are created, and that's content. But what's that equivalent in financial services if I'm a small business and I'm running my business, what's my Flipboard of my entire business there in my hand? They don't have that today. And so how does that happen? Or for consumer, my entire financial life, I can use all these different pieces because I like this provider better than this provider, and being able to actually create that and own it. So it's the Yodely of the future, I guess. Sorry.
Yeah.
Kind of Yodely of the future. But I also think we need to look at what I get excited about is looking at other technologies and how they're used today, right? So what is the equivalent of how we will use Clear in the future for banking? What is the equivalent of how we use, has somebody been in an Amazon Go store, right? If you've been in the Amazon Go store, right, you just walk out and you've paid for something. What's the equivalent of that in banking and financial services? So if you start taking these pieces of these different technologies that consumers are getting used to, familiar with, comfortable with, and then go, what does that do for financial services in the future? I think thinking about that with embedded, all of a sudden you're like, whoa, we've got a totally different world in 10 years. And so that's kind of what gets me excited.
Yeah, all the same, right? And I think the key in that future is going to be optimization, because I could see that becoming a hellscape very quickly too, where, you're getting bombarded with every possible offering and all that, right? And so like, I don't want to go to the AI well, but like, AI models to optimize presentment, again, of the right product, the right offering at the right time in a seamless fashion, I think is where this eventually goes after some time and becomes incredibly powerful. And then I think there's some questions with it, not to end maybe on a more negative note, but like, the recent kind of, I don't know if anybody saw the article around quantum computing, breaking RSA encryption from China, right? Like that cybersecurity landscape and that threat landscape is there. At the end of the day, you're taking something very sensitive and putting it into areas that don't typically support financial products and financial regulations. And so like, I think that's the other part that's going to have to come along with it becoming ubiquitous is the security, the risk management, the regulatory management that comes all of that, which is, it's not the fun parts to talk about, but it's hypercritical in the evolving landscape. And, we'll see where that goes, but that's, yeah.
Wonderful.
Thank you for joining us on Build What's Next, Digital Product Perspectives. If you would like to know more about how Method can partner with you and your organization, you can find more information at method.com. Also, don't forget to follow us on social and be sure to check out our monthly Tech Talks. You can find those on our website. And finally, make sure to subscribe to the podcast so you don't miss out on any future episodes. We'll see you next time.